Welcome to the XUCPA channel. As October 15 is approaching, or whether this is tax season or not, this is a reminder to everybody. These are common mistakes that taxpayers make when they file their taxes. Stay tuned.
Here are some common errors to avoid when preparing a tax return. Missing or inaccurate Social Security numbers. Each SSN on a tax return should appear exactly as printed on the Social Security card.
Your tax return will be rejected if your Social Security number is invalid. Now, if you file electronically, which is what we recommend, you will always get an error message, and the system will actually tell you that IRS is rejecting this tax return, and we get it all the time. That's why we recommend that you do not submit by paper, because if you submit and mail it to the IRS, it's going to take a long while before you realize that your tax return has actually been rejected.
Misspelled names. A name listed on a tax return should match the name on the person's Social Security card.
How often do we see that? All the time. Your middle name, your last name, your first name, or a longer last name. So all of that, you need to make sure that you match it against your Social Security card and your most recent updated Social Security card. Otherwise, your tax return will be rejected.
Incorrect filing status. Some taxpayers choose the wrong filing status.
Like somebody who has been married for 10 years, they have been filing as single. If you are married, you are married. You have to file a tax return that discloses that you're married.
Math mistakes. Math errors are one of the most common mistakes. They range from simple addition and subtraction to more complex calculations. Taxpayers should always double-check their math. Better yet, tax prep software does it automatically.
Of course, we've seen those tax returns where they print out the PDF and they use a calculator, and sometimes they try to do it manually, and mistakes definitely can happen. We've seen it before.
Figuring credits or deductions. Taxpayers can make mistakes figuring things like their earned income tax credit, child and dependent care credit, and the standard deduction. Taxpayers should always follow the instructions carefully. For example, a taxpayer who's 65 or older or blind should claim the correct higher standard deduction if they're not itemizing.
It is really big, especially for business owners. Just because you don't have good bookkeeping accounting process, you have missed out a lot of legitimate business deductions.
Incorrect bank account numbers. Taxpayers who are due a refund should choose direct deposit. This is the fastest way for a taxpayer to get their money. However, taxpayers need to make sure they use the correct routing and account numbers on their tax return.
This is something that you have to double check, triple check, quadruple check, because if you are due for a refund and you have an error in your bank account, IRS is not going to know, IRS is not going to tell you. It will just go to someone else's account, and that would be a disaster.
Unsigned forms. An unsigned tax return isn't valid. Period. In most cases, both spouses must sign a joint return. Exceptions may apply for members of the armed forces or other taxpayers who have a valid power of attorney. Taxpayers can avoid this error by filing their return electronically and digitally signing it before sending it to the IRS.
You cannot submit a tax return by paper and not sign, because IRS would not take it.
Filing with an expired individual tax identification number. If a taxpayer's ITIN is expired, they should go ahead and file using the expired number. The IRS will process that return and treat it as a return filed on time. However, the IRS won't allow any exemptions or credits to return filed with an expired ITIN. Taxpayers will receive a notice telling the taxpayer to renew their number. Once the taxpayer renews the ITIN, the IRS will process the return normally.
So those are all the common mistakes that the IRS has discovered, or even we have discovered, that taxpayers have often made. Now, there are 3 key points that I would want to share with business owners. Number 1, if you file your own tax return, please do not paper file. you stand a 50-50 chance that IRS may not even receive your tax return. Number 2, please do not do it manually. I mean, seriously, like we have seen business owners who actually went and print out PDF copies online and then just fill it out by hand. Please do not file your tax return using that method, because that's ancient and that's a method that would actually be very prone to mistakes and errors, and you don't want that, especially if you run a business. Number 3, accounting system. Please do not add up all these receipts and then try to do it manually on Excel. That is a method that will be very time consuming. We encourage you to use accounting system. There's a lot of affordable accounting system. There's QuickBooks, there's Xero, there's many more, there's Sage, and I can name all these systems, and they are all, comes with different range and very affordable pricing. And please consider that if you are a very busy business owner. And as usual, if you'd like to support us, please click like, share, and subscribe to our channel, and we will see you next time. Thank you. Bye bye.